Okay, it looks like we're live. Good morning, everyone. Got about 15, 16 minutes to the open, so let's just take a quick breeze through what we can expect for the day ahead, and we'll see where that leads us. And then don't forget, we're going to head over to the trading room after this for subscribers. So again, there's all the precatory language. These videos are for educational purposes. It's not meant to be financial advice. It's meant to help you learn how to trade. So always take it with a grain of salt. Get your investment advice from professionals, not from people putting out videos on YouTube. We're brand new to YouTube and putting these videos together. So, I mean, we're literally at the beginning stages, the soft opening, if you will. So we do need your help. We want to build a small but dedicated trading community. So be sure, if you like the content, hit the like button to help us start rising in the algorithms. And also consider subscribing to the channel, and then that way you'll get all the various notifications when these come out. We do the show pre-market, post-market, and on Sunday nights. And I think you'll find it to be quite beneficial. By the way, I'm A.F. Thornton. I'm the Chief Investment Officer at Blueprint Quantitative, and I'm also the math geek that designed a lot of the algorithms. So again, you can go to our website, blueprintquantitative.com, for more information. So let's jump into it. Of course, our theme for the week has been, we just completed a leading diagonal down in the S&P 500 index futures, which is what I exclusively trade. And so the question in everybody's mind is, how far is up? Not much change from yesterday. We're still looking at, possibly this being a two-wave up or a B-wave up. Either way, targets are usually the 50 and 61.8% retracements of the decline from January. So that could take us up to 41.50, even up to 43.50 or so. So be sure to look at our current market thesis, which is over on the website under the blog section. We really haven't changed that since January. Our ultimate target on the S&P is 2,500. But as we saw in the last two secular bear markets in 2000 to 2003 and 2007 to 2009, that can take about 12 to 15 months. So we could be bottoming this thing a year from now with a lot of zigs and zags in the middle. So, but this little retracement of the bear is aligning with the seasonally strong summer rally period. And also we're getting a little boost from quarter end rebalancing and monthly options expiration, which is Thursday. This week, the sandbox is 38.15 to 40.15, but for today, what we care about is the sandbox between 38.55 and 39.65. That's the expected move for today. I'm a firm believer in keeping things simple and keeping my charts simple. So the only thing I want on my charts is what's in that range. I can look a little beyond, a little below it, because these ranges only stick about 70% of the time. But that's what I want to focus on. And more importantly, I'm a stop hunter. Think like a retail trader, but don't act like one. I'm always looking for where those retail stops are, and I'm always looking to get aligned with whatever the market is doing that day to go and run those stops, which is where I usually get out. The Navigator algorithm, which is really our signature product, gave a new buy signal on a data chart last Thursday at 38.8875. That buy signal is still in place, and that's what we're operating from. If you ask me, the daily chart looks like we're just doing a flag to go higher. But in that context, typically when you bottom a market and put in a new low, you usually retest it most of the time within about a week. And we didn't do that here, at least on the S&P 500 index. So it does look like a V bottom, and a V bottom would make sense with the air pockets above us, but it's got to get going to maintain that V. Otherwise, we will see some kind of a test of that low. Again, still in a bear market in the intermediate trend. And this area that we're in, I emphasized yesterday and I will today, we'll look at it here in a minute, but there's a lot of things clustering between 3,900 and 3,920. It's a formidable zone to get over, but if we do, it will also supply quite a bit of support. So right now, I'm just looking to see, are we going to push away from this level and head back down, or can we conquer it? I think I give a slight edge to being able to conquer it. But we'll talk in a minute. There's a lot clustering there, including the volatility trigger, which is sitting around 3905. Below that, we're in a negative gamma regime, which means that rallies and declines are exaggerated. Volatility is higher. Above it, volatility contracts, and we get into more mean reversion type of behavior. So reviewing again, the key inflection point today and for the rest of the week is this super high volume node and key cluster between 3,900 and 3,920. So, whether we're going to punch through it or come back down through it, it's a big hurdle. There are big air pockets both above and below the node. What I'm talking about is, because of gaps and other things, there's just not much volume before we get to the next high volume node. So these valleys, these low volume areas will typically allow the market to move very quickly once we conquer this zone, if we conquer it. And of course, you also have the 21-day line sitting in that zone. You've got Friday and last week's high sitting in that zone. And you've got we're basically at the 50% retracement of this last down leg. So there's a lot sitting there. If we can get through it, like I said, it's short-term bullish if we can get through it. And of course, it gets more bearish if we can't. Again, I'm giving the edge to getting through it based on we've got some tailwinds here coming into quarter end. I already talked about the bullish flag. I think, the top of this week's projected range, I talked about the daily range, but the top of this week's range is right up above around 40.15, and that's really the target. So I want to stay focused on that. We'll look at our chart here in a minute. And then, of course, always watch your roundies and half roundies. Every 50-point increment on the 100-handle block is going to be support and resistance, and where a lot of the open interest on options sits. So here's a little chart of the whole thing. All I've done here is put in what these levels are. I've divided today's projected move into quartiles. Obviously, I'm leaning long right now because I think that's a short-term context. And so if I can establish positions in the bottom quartile, long positions, that's always more favorable. And as we get into the red zones or the top of the projected move, I'm going to be a little hesitant to go long. So here's your 21-day line or mean right here in the middle of the range. Here's the 5-day line, which both of these are providing support right now. We'll see how it goes. At the upper end of the expected move, depending on how fast we get there, we've got that supply line coming down from March, which is the 50-day line's kind of tracking that. We've got some snow lines in here that come from the projections from the bottom of 2009. These lines have been in here forever, and again, do act as support and resistance. There's your volatility trigger for the options market. Here's our zero gamma and highest open interest, which is right up around 4,000. And here's that prominent high volume node. The June monthly halfback is sitting here. The 50% retracement of this. So, again, here's the market sitting over here. This is the area to conquer. It is what it is. Let's just see if we can get through it. Basically, we're still, in kind of a cautionary period. We're still in a bear market. Don't forget that. don't hold any opinions too tightly, especially on the upside. A lot of exogenous events out there, daily reports that we may be going to war, as crazy as that sounds. And so the red letter reports today, I think the only thing we have to watch is a conference board. Consumer confidence numbers are coming out about a half hour after the open. Maybe it makes sense to wait. Yesterday's Treasury auctions were very weak, which is of concern. The Case-Shiller indexes showed housing prices increased over 20% in the last year. No surprises there. And the Dallas Fed numbers were terrible yesterday. So again, recession does look like it's definitely on the table. Again, Friday was a big range expansion day, so I think the market's just digesting that. Talked about quarterly rebalancing. And I continue to watch, you got to watch the bond market. It's the tail that wags the dog. Junk bonds in particular. I mean, junk bonds, crypto, those things don't look like they're really participating well here. If the junk bonds fall to a new low on the hourly charts, might be one of the few things I'm watching. In addition to just the price action of the index itself. And again, crypto is still trading on thin ice. We had a big fund default on crypto loans yesterday, one of the biggest out there. So crypto looks like it could be the catalyst to take us all down, but we'll see how it goes. Today's approach, same as always, who's off sides. I'm going to trade inside out on a 2-minute with 15-minute chart as my anchor. By the way, the 15-minute chart is in a sell mode right now, but mostly going sideways. So I'm not jumping up and down to do a trade. I don't see anything. I mean, the market's basically bounced overnight. We took out the stops above yesterday's high and below yesterday's low. We're in the middle of the range, maybe a little bit towards the upper part. So, there's really no opening trade that I see here. So I'm going to wait. I'll look for the usual 30-minute breakout trade. And after that, I'm just going to be leaning against various levels. I've identified them all here, looking for, areas to get long. If it does continue to be a balancing day, I might consider some shorts, but I really think that I like to just, trade in alignment with what I think the trend is for that day. And I still think the long side has an edge here. And again, always look for stops. Don't forget to look out to your left. There's a little summary of the day I'm expecting ahead. So again, not much different from yesterday. The range narrowed a little bit. Again, for the most part, we're consolidating. And watch that consumer confidence report. So with that, we're going to all head over to the trading room. Have a great day, and good luck with your trading. Bye-bye.